Hi, good evening, all. I welcome you all to this 1 hour webinar on cost optimization. It's really good to have you all. Once again, I would have to do a quick audio and visual check. Hi, Vandana, can you hear me? You can take support from the link which is shared by my team. That should be able to help you with the audio. All right, moving ahead. As we move forward, I would like to run a few checklist items to help us get the best from this webinar. I request all the participants to remain on mute at all times. Ask questions as soon as you have one. Please put your comments and questions on chat only, and we will take it up from there. Strengthscape is an organizational transformation and development company headquartered in Bangalore. As most of you are already aware of our services, we are into behavioral training, HR certifications, competency mapping, and many more. Uh, we've also partnered with Wiley for everything disk class of products, Central Test for psychometric assessments, Skillsoft for their off-the-shelf e-learning content. For this webinar, we have partnered with Unique Comply, and we have Mridul Agarwal from the firm, who is a CA and a lawyer by profession. And through his lens, we will deep dive into understanding the concept of cost optimization. I now request Mridul to take the webinar forward.
Uh, Thank you, Aishani, for the introduction. Uh, I hope all the participants can hear me loud and clear. And if that's the case, we will move forward with our webinar for the day, which is on cost optimization. All right. Now, what exactly is cost optimization? Why is it required? And how can you achieve something in this area? But before we even deep dive into uh, what is cost optimization, why is it required, and how is it required, I think there is something which we need to understand about the present scenario. I think COVID-19 has had a deep impact on the entire globe uh, as an economy, and not just as an economy, but also uh, as a people. We all have been deeply affected by this pandemic. Uh, what has been the impact of this pandemic? Uh, Not just at a micro level, but also at a macro level is something which we did in our previous webinar. The kind of stimulus which the government came out with to facilitate economic development was something which we did in the previous webinar. Now, in this webinar, we will be talking about how COVID-19 has basically impacted SMEs, the MSME sector, and how, or rather, what should the MSMEs be doing to overcome the impact of COVID-19. All right. But I think one of the biggest problems which has been affecting basically majority of the MSMEs today has been cost, revenue, and profitability. The basic objective for any startup today, all right, is to get funding and uh, how to attract investors to their company. So they are willing to do almost anything to get their first term sheet signed by their investors. But what most startups forget is that it's easier said than done. Getting investors hooked onto your idea, getting investors to invest in your company is not that easy. All right. Well, even for those startups which do get their investments in the start, find it a little difficult to run in the long run, simply because their focus has been how to increase their revenues rather than on profitability. The focus has always been on revenues and on valuations. Well, if you were to ask me, the along with revenues, it's also the profitability which matters a lot. And profitability is a sum total of your revenues and your cost. All right. So a focus only and only on increasing revenues is not going to help you. The focus should also be on how to minimize your cost. And in today's webinar, we will be dealing with on how you can optimize your costs. But before we even move forward to understand the question how, let us first try to understand the what part of the definition. Let us first understand. I'm pretty sure we have a cross section of participants in today's webinar. Some of you people may be working in companies. Some of you may be from a non-finance background. Some of you may be CEOs, owners of startups. Some of you may be consultants. So basically, we have a cross section of participants. So it's all the more fair for me to explain basically what cost is all about. All right. So what is cost? Simply put, cost is nothing but the amount of resources given up in exchange for some goods or services. And also the resources given up are expressed in monetary terms. In simple terms, something which you sacrifice to obtain something in return is known as cost. Now, cost is a very, very generic term, all right? And if you were to ask a person dealing only with costing and budgeting, he would have different definitions of cost. If you were to ask an accounting professional, he would have a different definition of cost. If you were to ask a layman, he would have an entirely different definition of cost. But I think what all the people can agree with is a few basic types of cost. And what are they? First one, it's a fixed cost, something which does not vary with the level of output in the short term. A few examples of fixed cost being your rent, salary, basically executive salary or salary paid to managerial level employees, the amount of insurance premiums which you pay are all examples of fixed cost. The next important type of cost is variable, something which varies in direct proportion with the level of output. Examples being labor expenditure, raw material, selling expenses. And lastly, we have something called as a semi-variable cost, a part of which is fixed and the other part is variable in nature. You really cannot ascertain whether it's clearly fixed or variable. That's why the term semi-variable. Examples being your telephone bill. What happens when you pay your mobile phone bills or your telephone bills? It's the charges are fixed for a certain number of calls, and then thereafter you have to pay a certain amount per call. Now, this is a terminology which many people would use on a day-to-day basis. Operating cost. Now, what exactly is operating cost? It's nothing but the cost of goods sold plus your operating expenditure. What is cost of goods sold? The money you've spent on buying your material, your labor, renting of plant and machinery, wages, basically something directly related to production of goods. And what are operating expenses? My day-to-day expenditure, like bank charges, stationery cost in the office, rental expenses, salary and wages, accounting and legal fees, marketing expenses, etc. Now, what I want to show here is uh, is the income statement of a company. All right, it's a pretty basic income statement here, and what you find is that on top we have the sales less your variable costs, something which is directly related to my production, and then you have the contribution, the amount of contribution which you get from your sales. And then after we reduce the fixed costs, we arrive at something called as the operating profit, or as it is popularly called, earnings before interest and taxes. Less the interest cost, which is 20,000, you get EBT, which is 10, and you deduct your tax, you arrive at something called as earnings after tax, or as it is popularly known as net profit. All right. So why did I show you this income statement? This particular item on top, the sales, is known as a top line. and the amount given below, the net profit here, is known as the bottom line. So what invariably happens is that most of the startups today concentrate on this particular number. The focus is always on how to increase the top line, because if the top line increases, the viability of the company increases. It becomes a lot more attractive to get investors. All right. And once you get the investor, what generally has been witnessed is that there is a lot of cash burn. And it's because of this cash burn that companies get other rounds of funding. Company keep getting series A, B, C, etc. They keep getting funding. But the focus is never on this. The focus is never on this aspect of uh, our income statement. It's estimated that less than 5% of most of the startups today focus on the bottom line. The focus has always been on the top line. And sadly, in this COVID-19 crisis, or the entire post-pandemic scenario, most of the investors now are going to be concentrating on those kind of businesses which will have viability in terms of profitability, and not just on increasing sales. Now, coming back, when the focus of most of the investors will be on maximizing profitability, the focus for the founders of the startups should also be on this. So the question is, when you know how to increase your sales, why am I not making profit? The only answer is because of my burgeoning costs. Now, how do you control these costs? Pretty simple. When any company is working, or rather when any startup is working, they are going to incur fixed costs. All right. And if they want to scale up, their variable costs are going to increase. So if I were to summarize and make it simple for you, variable costs are an indicator of how much your sales are increasing. Fixed costs are something which will remain constant irrespective of the level of activity. So the variable costs indicate how well your sales are picking up. Moving on. What is cost optimization? It is a continuous process of obtaining the best pricing for our product with no impact or reduction in the quality of the product, and ensuring that the customer satisfaction scores are maintained. So basically, you offer the best price for the product without a reduction in the quality, and ensure that your customer also remains satisfied. Next, in simpler terms, it's more for having less. Lesser the cost, more satisfaction for customers. Now, cost optimization and cost reduction is something which always tends to confuse the layman. And in my experience, when we talk to our clients, we have a cross section of clients with MNCs, startups, mid-sized companies across the board. One question which many founders or people who are from a non-finance background always ask: how do I reduce cost? How do I reduce cost? The costs have to reduce. The costs have ballooned. How to reduce cost? We say don't reduce cost. We say optimize your cost. So, is there a difference between cost optimization and cost reduction? That is something which we need to answer. And simply put, cost optimization and cost reduction are actually used interchangeably, but they actually have different meanings. Cost reduction actually refers to a more immediate activity, wherein let's say you have a salary of let's say 10x, you reduce that to x amount, and that happens over a very very short period of time. That's called as cost reduction, something which you can immediately do. If my costs are ballooning, let's fire a few employees, my salary cost goes down. If my interest cost is ballooning, let's close down a couple of overdraft facilities which we have. That way my interest cost reduces. So that's known as cost reduction. But what is cost optimization? It is a continuous effort specifically designed to reduce spending but maximizing business value at the same time. So, simply put, cost reduction is a short term effort, whereas cost optimization is a much more long term effort, which has to be defined by the management, and there has to be a sustained effort in that direction. And sadly, 90% or maybe even more of the startups focus on cost reduction than on cost optimization. And our focus should be strongly and strongly on optimizing costs, not merely on reducing cost. Cost reduction is just one aspect of optimization of costs. Now, what are the important goals of cost optimization? It's basically a balancing exercise between minimizing my costs and maximizing my business value. So basically, the objective is if my business value is increasing, and if even though I have to incur a little extra cost, I think I should be doing that. I should be balancing between my goals and my costs. So invariably, if you're concentrating on increasing or maximizing business value, you will get your term sheet signed, no doubt about that. Because the investors today, especially in a post-pandemic scenario, are looking at businesses which can create value, and hence the importance of having a focus towards cost optimization rather than reduction. Now, I do agree that doing this is not easy at all. It does offer a lot of pain, but then again, they say that no pain, no gain. The idea for any business should be to obviously minimize risk, minimize cost, but maximize business value. Easier said than done. It's not easy at all. How do I reduce my cost, but at the same time maximize my business value? Let us have a look at a few of the ways in which you could optimize your costs, or you could look at increasing value in your business. First and foremost, so before I actually start doing this, I think it's important for all the participants to understand that the measures listed here are quite generic in nature, because like I said earlier, we have a cross section of participants here. We have close to, I think, 60, 70 participants, and the cross section of participants is quite huge. So trying to be quite specific would be a little difficult. However, if you have certain questions, do feel free to add them in the chat window, and we will have a short question and answer session towards the end. But right now, coming back to the measures which can be used to optimize costs. First and foremost, there should be a digitalization of business processes. Every organization should develop an integrated approach, which brings together competencies and expertise across levels in the organization. Uh, and digitalization plays a very, very important role in in helping to develop that integrated approach. Rather than manually doing stuff, if you can digitize certain aspects of your business, you will ensure that not just is the efficiency level increasing, but also the employees are much more happy, they are much more engaged, and they will end up appreciating the business processes in the organization. Now, what process to digitalize is completely dependent on what kind of business you are in. Next, improving business efficiency through analytics. I think over the past year or so, there have been quite a few advances in the field of technology like blockchain. You have technologies like Internet of Things and many other technologies, innovative technologies, which have had a big impact on how we do business, and especially data analytics. This is the next big thing. Data analytics using artificial intelligence is probably the next big thing. People think that data analytics and having a software in-house or probably outsourcing it may be a very expensive proposition, but actually that's just a misconception. Using data analytics takes the business a long way. To just give you a small example, one of our clients is into selling on various online portals, all right, and this particular company had huge costs in terms of commission payable to the online platforms, salaries payable, and the like. So they were not exactly able to pinpoint whether the margins which they were earning were sufficient for doing business, and whether they were actually getting the required momentum from their line of business. So it was highly impossible for us to calculate the commissions payable because the transactions went into thousands and thousands of line items. So what we basically did was to hire a software and use that software to analyze which area, which segment of their business had greater revenue potential, as well as lesser commissions payable to the e-commerce portals. So this way, we were able to identify select areas of business, and that way we started focusing only and only on those areas. So what was the lesson that we learned from this? We had to spend some amount of money on getting a licensed analytics software, number one. Number two, the benefit of having actually spent that amount of money on the software, we realized that we were burning too much of cash in other product areas, which were actually not giving us any returns. So what we did was discontinue those product areas and concentrate only and only on those areas or those product lines which actually had huge upside potential. So try to invest in an analytics software if you can, or try to hire people who are really good at analytics. The cost incurred is well worth the effort. Next, try to automate a few of the processes. There is something called as the Internet of Things available out there. So if you can leverage on something known as the Internet of Things, try to automate certain processes. What will happen is you will see that the time consuming tasks earlier, you will save a lot of time. You will ensure that there's no repetition. Employees can focus on more meaningful and more productive tasks. And like they say, time is money. That is absolutely true. So why not just automate a few of the processes? It's a one-time expenditure. However, the benefits from optimization of processes cannot be underscored. So what generally happens in most of the MSMEs or startups that we advise is that when they start off business, the focus is on increasing business. And the only way you increase your business is by hiring more people. Now, sadly, that's far from the truth. It also depends on the kind of business you're in. Why not hire talent and use that talent in the right areas? Automate processes, get the machine, get the computers to do the work for you, rather than just hiring more and more resources. Time is money is a very important concept in cost optimization. Try to improve data management. I think someone has rightly said data is the new oil. So oil has probably lost its luster. It's data, which is probably the most valuable asset which anybody can have. And if data is gone, your business is nothing. It's often said that you carry your business in your laptops, and that data is like a gold mine. So why not spend a little bit of extra money on ensuring proper data management processes? why not invest in probably cloud storage, which makes it all the more efficient to store the data? Uh, why not work on cloud computing? I think with COVID-19, many of the organizations have shifted quite dramatically towards cloud computing and cloud storage. Many people working from home, they have all started working on servers, store the data on some server wherein everybody has access to it. This saves so much more time in sending emails and editing the file and then sending it back to the other person. And there is constant back and forth of files. So all the more convenient method is just upload the file onto some cloud-based server where everybody can see it and do the editing on the cloud itself. So basically, automation or data management, online data management, helps you not just save a lot of time, it helps you make financial decisions very, very quickly. This is an asset which I think every organization should be focusing on. Supply chain optimization. This is something which I keep harping about to many of our trading and manufacturing entities, especially because what generally happens in trading and manufacturing entities is that there's not much of focus on on reducing costs. They just get the cheapest quotation available from different vendors, and they make a purchase just like that. However, have you ever taken a chance to look at the second highest quotation or the second lowest quotation rather? Maybe that second lowest quotation, the vendor who's offering you the second lowest quotation, may be offering you other inherent advantages. Maybe there could be a synergistic benefit in the near future. The point I'm simply trying to make is this: supply chain management, or rather supply chain optimization, is very, very crucial. uh, because of COVID-19, obviously, everyone knows that the supply chains have been devastated throughout the world, not just in India. Raw materials unable to be transported to factories, and the finished goods which have already been produced are unable to reach the final markets. So we have seen huge disruption in the supply chain. So there's a constant need to not just improve the supply chains, but also improve its efficiency. Any person or any vendor who enjoys an advantage with respect to supply chain is going to be profitable in the long run, come what may. It's estimated that 20 to 50% of supply chain leaders will reduce their costs and increase their business exponentially. And this also helps you manage your working capital requirements. Uh, Next, you need to probably concentrate on improving your asset management. Now, asset is obviously something which gives future economic benefits to a company, and management of these assets becomes very, very crucial. What generally happens is that many startups tend to neglect their assets, and assets can be anything. All right, it can be your plant and machinery to even your software. So how do you manage your assets? Try to have an automated system to manage your assets. I think the first and foremost thing is for you to have a record of all the assets which you have. All right, number them, label them, and count them at regular intervals. That's very, very critical. Second, identify the possible problems which your assets may face. For example, for a large manufacturing concern, their plant and machinery is everything. So they need to have regular maintenance schedules. Any deviation from that, if one machine stops, there is a complete breakdown in the manufacturing process, and this breakdown can take away crucial man hours, costing you crores. We have seen that happening in one client of ours, wherein one machine stopped working because of a malfunctioning part, and later we realized that if regular maintenance was carried out, that machine would have worked perfectly all right. So you need to ensure continued maintenance for your machinery. Next, if it's possible, why not install any preventive maintenance softwares? Which these sort of softwares, they help you carry out routine inspections and maintenance schedules. They bring down the downtime significantly and increase longevity of your assets. Also, there's something called as visual asset mapping tools. These are tools which make it easier for users to collate asset information and use that information to get best industry practices and implement them in the organization. And lastly, comprehensive solutions like equipment asset management help organizations gain overall operational efficiency. Next, improve inventory management. This inventory management is a big challenge for business leaders, leaders especially in business areas like trading or manufacturing. This is a lever, and this is one of the most significant items on my balance sheet. All right, and my entire working capital can get choked if I do not have a robust inventory management system in place. And the most efficient way, in my personal opinion, to manage your inventory is to get a robust inventory management software in place, or to have a strong warehouse. Focus on improving your warehousing techniques. And if you have to spend a little amount on an inventory management software, I think the expenditure is worth it, because most people, or rather most startups today, like I said earlier, focus on sales, how to increase sales. So any product which is selling like hotcakes will be the focus for these startups. But what they need to realize is that these products are going to be selling like hotcakes only for a limited amount of time, and the market is going to be overcrowded. What after the sale period is over? What after the euphoria around that product dies down? Your company is going to be saddled with a whole lot of inventory which will remain unproductive. So you need to really, really identify what kind of stocks you need to have, what kind of stocks you need to move out first. If you have certain stocks which are going to expire, it makes sense to sell them at a discount rather than not sell them at all and get 100% loss on them. How do you actually track such inventory? It is with the help of an inventory management software, or alternatively with the help of a robust warehousing system. Business process outsourcing, I think this is something uh, which most of the startups do not want to do. And this is a complaint which I personally have against many startups. The reason is very simple. The moment we go and approach any startup for any kind of advice, they say, hey, we are just a startup. We can't afford the cost. And then I end up telling them, I haven't told you my cost. So they say, just keep it reasonable, whatever it is, we are bootstrapping. We don't have enough money. Now, that is an approach which I think most startups or most founders need to shed, because for how long are you going to get pro bono advice? Not many consultancy firms or any organization out there, a professional organization, is going to work pro bono for you. They will expect something in return. And if you're thinking that you're going to pay them a hefty amount on signing your first term sheet, you need to realize that majority of the startups don't reach that stage of signing the first term sheet. So you really, really need to pay to get the right kind of people. It can be on finance, it can be on technology, it can be on any area which your business needs. If you can outsource certain parts of the service, for example, inventory management or payroll or accounting or the entire finance function for that matter, it will help you to concentrate on your business. For example, in our area, finance is something which founders generally tend to leave to other people. They say this is a very dirty field. I do agree, it is dirty. And we are the people who actually get down there into that dirt and help you clean it. If your finances are not in place, you're not going to get that investor, and you're not going to know how much you've spent extra, how much you've actually earned. So if you have an opportunity to outsource a part of your business, for example, the finance function or inventory management for that matter, to a professional organization, I think you should do it. The expenses may be huge in the start, but I think it's going to pay you off in the long run. What most startups do currently is just concentrate on doing business. They work on their idea, they pitch ideas, and they pitch to many investors. But what happens lately is that investors don't invest because the back end, the crux, the finances are not in place. So try to outsource a bit of your businesses if you can and if it's possible. A few other steps to make cost optimization successful: set targets, make it attractive for the top management, plan areas to optimize, identify key improvement areas and potential quick wins. I think one example which I can give is that if you're a trading concern, one area which you could quickly improve on is your inventory management system. So if you can improve by getting any inventory management software and clean up the entire outstanding inventory, get rid of unproductive inventory, I think the investors would be really, really game for investing in your business. Next, roll out a cost optimization plan that is implementable and impactful. I think for doing this, the very first thing that any startup or MSME needs to do is basically look at that income statement. Which cost am I incurring which is too wasteful, which is way too much? This is not required at all. You need to do a deep dive. You really, really need to analyze what your costs are, where you're spending too much, where you're burning too much of cash. All right. And once you realize that, you need to start implementing it. You need to have an impactful uh, cost optimization plan in place. And next, develop a proper monitoring and tracking system with appropriate governance around it. Obviously, when you've had a cost optimization plan and you implement that, it needs to monitor on a continuous basis. If the founders or the entrepreneurs can't do it, you should get someone to do it. Because until and unless you monitor the plans you've put in place, there's no point in having actually planned and implemented that particular plan. Uh, what are the steps for strategic cost reduction? Firstly, come up with a strategy. I think coming up with a strategy is very, very important. And many entrepreneurs lose out at the strategy formulation stage itself. All right. For that, you need to understand your operating model, what kind of business you're in. And after you've done that analysis, analyze what kind of costs you really, really need to cut. I think the first thing which any startup who gets their first term sheet signed is get a fancy office. The founders pay themselves $1 million salary, and they just have a blast. Well, that's not how you're going to increase your business, right? So the moment you get your first term sheet signed, that money has to actually be optimally used to increasing the next, to get the next business idea and to improve your existing business idea. So first of all, uh, identify what kind of a business model you're in, and then make that strategy. uh, Now that you've identified your operating model, you need to identify the kind of costs you've incurred and also identify the kind of returns you want on those costs and whether it will be viable for you to incur those costs. Well, there are many businesses which just go on incurring cost without actually having done an analysis. They just think, hey, if I increase cost by aping some other company, I will get a huge traction in the market. But unfortunately, they don't know whether that cost is actually beneficial to their line of business. So get down to actually analyzing that stuff. And lastly, you need to increase, first of all, understand and then increase interaction between different business units. Big manufacturing concerns have various departments, production, sales, and what generally happens is the interaction between the production and the sales department is very, very little. All right. The inputs for manufacturing actually don't come from the sales team, they actually come from the top management. Top management is just looking at the business as a whole. Ideally, the inputs should also be coming from the sales team because they are there on the ground. What generally happens is egos kill businesses. The sales team is thinking the business is doing great because of me. The production guy is thinking I'm producing the best products in the market, and that's the reason the sales guy is able to sell. There's absolutely no communication involved there. This is something which most businesses need to get rid of. After you've got a strategy, align the costs to the strategy which you've framed. Because at the end of the day, when you're implementing a strategy, you need to have money. All right. However, the money you're about to be spending on your strategy needs to have some meaning, needs to have some aim and intention. So, for that, you need to identify different methods on how to get closer to your customers and meet their expectations. Try to identify what customers really, really need and compare with what you have. Then try to come up with certain methodologies and plans which will help you minimize your costs and also ensure that your strategy will be able to meet the needs of your customers. Then try to eliminate wasteful costs. For example, uh, there are quite a few businesses who have unnecessary product lines. There are some businesses which have unnecessary expenditures like a fancy office or a fancy uh, or fancy systems which they actually don't need. Why not get rid of such fancy things which you don't need? Why do you need a fancy office when you can bootstrap and work out of a co-working space? That way you will be able to reduce most of the fixed costs, and that is what sets most of the startups back, which is the fixed element of the cost. There are some expenses which may be necessary. For example, you may want to lease that office and it may turn out to be much cheaper than a co-working space. If that's necessary, please do go for it, because you never know, if you get the next big break, you might have to double your team, and that co-working space might not be enough and may also be costly in the longer run. So why not take something on lease with an idea on the future, and use end-to-end cost analysis to see what activities are being carried out and what value they deliver. Instead of approaching something from the cost angle, try to approach a particular issue from the value angle. What kind of value will I be getting? Set the bar high, be bold, be brave, be creative. If there is a software or a technology which suits your business needs, I think you should go for it. If there's intuition which tells you that, hey, this is going to work, you should go for it. But please don't rely only on intuition. Do a thorough analysis. Set targets, set a bar higher. If you set, let's say, a 10x bar, you will probably end up achieving X level. You need to be bold and brave at the same time, along with being creative. Look at creative ways of doing stuff. Uh, Cost optimization or cost reduction happens only and only if you show leadership. Uh, don't be stuck in the assumption that if your peers, if the other competitors in your industry are not doing it, I should not be doing it. No, I think that's a mindset which most of the people should get rid of. There's no harm in being a leader. Probably you can implement a strategy and then let the others follow you. All right. So don't shy away from showing leadership. Try to set some sort of a direction. And finally, create a culture of cost optimization. All right. Unless and until that culture is there, I don't think any organization is going to even prosper, because you're ultimately going to do if it's a priority for you. If it's not a priority, then you're not going to do it at all. For example, many of the startups who get funding in the initial stages, be it angel or seed funding, they go all fancy and have a coffee vending machine. They get all sorts of furniture and other sorts of interior designing done for their office. Question is that all required? Probably yes, for a few startups in the marketing space, for whom it's important to be in the front end, it's important to do all that. But for other startups which are in the back end, is that really required? Is something which you really need to ask yourself. Secondly, if you're a person who really likes to spend a huge amount of money, the same habit is going to be implemented in your business. All right. And if you spend a huge amount of money, your employees also are going to copy you. So if you really want to optimize your costs, you really need to cut down on unnecessary spending, create priorities, get into a habit of saving for necessary stuff. All right. I'm not saying cut even the necessary expenses. What is necessary must be spent. Let's take a small case study. Let's assume that the company SM Limited has been conducting its operations using traditional methods. They have hired a new CXO who, after analyzing the company's profit and loss statement, has concluded that the company is incurring huge overheads and wants to implement a few cost optimization techniques. All right. So, this is the kind of profit and loss statement before they have implemented the cost optimization techniques, wherein they have a top line of 1500 crores and they have a bottom line of close to 369 crores roughly. If you see the kind of expenses which they have a huge employee benefit. The salary portion 350 and the COGS is 570 crores. Now, what observation has the CEO done? He has seen that there is improper asset management, which has led to huge repair and maintenance expenditure. The in-house HR department is not functioning at the optimum level, and the overheads incurred are huge and not bearing any results. And lastly, there is a huge creditors mismanagement. I mean, you've recognized your revenue, you're not getting money, and also along with that, you've had to pay huge amount of money to your creditors. That means your credit limits with your creditors are not at the optimum level. These are a few observations which the CEO has made. All right. Now, what does the CEO want to do? For what was the first point? Improper asset management. He wants to implement an asset management software, which will give constant reminders for maintenance. And this will ensure that the machines are functioning smoothly. This is especially true for manufacturing concerns, wherein big concerns have an asset management software. Now, I do agree that the licensing cost is a little higher, but imagine the benefits that you get out of that. With constant reminders that this is time for maintenance, you have to do this. They have an internal log which has an entire list of fixed assets and with constant due dates for maintenance. That maintenance, if done at the right time, is going to save you a huge amount of repairs and maintenance expenditure. Also, for HR, and probably I'm reaching the end of my session here. For HR, it's probably better to outsource the HR work. Why? Because this will ensure good quality work. The money which has been invested will fetch optimum returns, and the in-house department's inefficiencies can be overcome. And similarly, for payables, it's better to optimize your payables. Probably outsource it to a factoring organization. Payables process can be automated, due to which you will get constant reminders to pay your bills. And this software will do an analysis as to how much cash is available and how much payments has to be made, so that it will prioritize which vendor has to be paid accordingly. So this is what the P&L statement looks after the revenue constant. The net profit increases to 388.80 crores after the benefits or the steps have been implemented. So these are something which are successful cost optimization programs. What you need to discover a program, you need to scale the cost optimization program, design one, implement, and then maintain and grow that uh, program which you have just made. So this was probably the end of what I had to say. Over to you, Aishani.
All right. Thank you so much, Midul, for that insightful webinar. Just a quick announcement. We're also doing more such webinars in the same line of finance, which is again on the next Tuesday, which is on planning and filing of IT, income tax returns, investing during COVID, the do's and don'ts. And the 21st one is on working capital management and cash flow planning amidst pandemic. So now the floor is open for questions. If anybody wants to, do any kind of question answer round, you can do that. I see Jitendra's chat. He wishes to go to the previous slide. If you can just move over the slide once with him.
Sure.
Is this the one that you're talking about, Jitendra? Okay. You can post your questions on the chat. Hi, Andrew. We will not be sharing the slides, but a recording of the same will be shared. Questions for you, Mridul?
Uh, that's what I'm just going through the chat window. All right. Not sure if I'm audible, but Mr. Dharmesh has a question. My question is, how do we innovate in cost optimization? Can you give few examples of innovation in cost optimization? So, sir, I think I have given quite a few examples, even probably during the course of the webinar. And I think one example, not sure if it's innovative, but something which I've personally seen in my career as a management consultant, uh, right? We have been advising companies at the bootstrapping level to mid-level startups to startups who've got funding to even large MNCs. All right, and especially for companies in the inventory space which have a trading business, most of them don't have a robust inventory management software. They try to integrate the accounting software and inventory software together, simply because the inventory software is a little expensive. But what we have done as advisors is that we have been very uh, uh, we have put our foot down actually and told our clients that you need to have an inventory management software. Which one you want is completely your choice. There are loads of softwares out there. Just try and get one. All right, and uh, just see the difference. If it's not, you don't have to renew the license fee next year. So once that has been implemented, implementation is a pain point, we do agree, but once it's implemented, the entire process gets smoothed out. To put it in context, I think for one client where we did implement an inventory management software, the savings for that mid-sized company, it was an MSME having a turnover of close to 3.5-4 crores. We implemented an inventory management software, and we were able to cut down on pilferage and losses by close to 20 to 30%. And that for a small MSME is huge. we were able to do that simply and simply by investing in an inventory management software. So these are simple things which, if concentrated on, will bring about great results. Uh, then someone's asking me privately, what is your basic suggestion for non-financial leader to take initiative for cost optimization because of the changed world scenario and the toughest challenges which they are facing? So ideally, I think uh, what uh, what initiative you need to take is, firstly, make an income statement for yourself. First of all, analyze what kind of cost you're incurring, whether it is fixed, whether it's variable, whether it's semi-variable, whether I require to incur that cost or no. I think that is something which most people fail to do, or which most startups fail to do. They just do a very, very shoddy job at analyzing their finances. I think you really need to get some financial guy, uh, get uh, do an analysis for you. Even if it's at a small level, you need to get that analysis done, and probably you will get a different insight from a financial perspective. And if you've spent money, if it does not work out for you, then obviously it's not an expenditure. You can probably consider it to be an investment. At least your knowledge has increased a bit. So get down and make a plan is what I would tell you first. What kind of restructuring of debt is recommended during COVID to reduce interest costs? I think, Ms. Madhuri, that completely depends on the kind of business you're in and the kind of exposure to debt that you have. So, if we also would like to look at your financials to obviously get to know what kind of debt you have vis-a-vis your equity. The ideal debt equity ratio is 2:1. However, that's hardly the case with many startups today, with equity being very low and debt ballooning, going out of control. In many of the cases, what I've personally seen is that they take a loan, and they take another loan to clear out the first loan. So basically, many startups have fallen into a debt trap. So I really cannot commit, or rather comment on the kind of restructuring that is required, because that depends from business to business. If you do want a one-on-one kind of an advice, do feel free to contact us on the number given here, and we can definitely help you in helping you restructure your debt, and whether you should go in for more equity or not. Ms. Madhuri, I hope I was able to answer your question. Uh, what kind of salary restructuring of employees is recommended? All right. So I think, Mr. Deepam, that's a very valid question. Uh, Many employees have, many employers rather are saying, "Sir, we have no revenues, absolutely, but I still have to continue paying salaries to my employees. How do I reduce the outgo of my salaries?" So what I think you could do is probably uh, enter into a contractual arrangement with your employees, and pay them only on the basis of their performance. If you can, if that's possible, try to rework your employment contract with your employees and have a more variable payout rather than a fixed payout. And that way, the employees will feel motivated to work more harder, rather than just getting a fixed amount of salary at the end of the month. Or probably what you could do in the long run is switch over from having in-house staff to more of contractual staff. You have specialized HR agencies or manpower supply agencies which supply manpower for almost every kind of work that you want. So you could probably do that. Only when you have a big project on hand, approach them, they'll supply, get the work done, and then the contract gets over. All right, instead of having a permanent staff. So in lines of COVID, I think these are something which we are strongly recommending to most of our employees. Rework employment contracts with our employees. And I'm pretty sure employees will understand your pain. I hope I was able to solve that question. Uh, how does one get startups to think about cost optimization? Uh, Sir, I think most of the startups right now are thinking about cost reduction rather than on cost optimization. What they really want to do is, get access to cash from anywhere and not spend that amount of cash. So now is the right time to drill into them the priority which they should place on cost optimization rather than on reduction. Tell them to deliver more value in the future. You read any article in the newspaper or any other funding related article out there, most of the investors, the VCs or the angel investors which we have been talking to, are all saying we are not just investing based on their sales. We are investing on businesses which actually deliver value, especially in post COVID times. And this kind of a business scenario is going to stay for at least a year. Some people estimate it to be there till 2022. Now that is anyone's guess. Uh, how to optimize. Okay, what's my name? My name is Mridul Agarwal. It was there on the slide earlier. How to optimize the cost in facility management. Well, if you're into a business of facilities management, I think there are numerous ways in which you can optimize your cost. Now that most of the facilities are either vacant or not occupied, because obviously most of the people are working from home, I think what you could probably do is you know reduce the staff strength. That's one thing which you should probably look at, because in facilities management many companies have contractual staff. So if you could probably reduce that expenditure, you would be saving a lot of money, at least in the short run. In the long run, if you really want to uh, optimize the costs, especially in facility management, I think rather than giving you a general answer, a specific answer would be worthwhile, uh, because that way it would be more effective. And for that, what we need to do is probably have a one-on-one chat. uh, for doing this, we could probably analyze your balance sheet and your profit and loss account, and then give you customized advice based on that. So if you have any sort of questions, do feel free to contact us on the number and the email ID given here. Normally all consultation is related to pay financial requirements. Normally CA helps in filing returns. So I think that's the biggest misconception. I'm a chartered accountant myself by qualification. Not all CAs help in filing returns. That's just a misconception. So what we rather personally do is that we are a big group of chartered accountants as well, all right? And not just CAs, we have other finance professionals and legal professionals with us. So what we basically do is give end-to-end advice to clients, and which includes filing of returns. So I think that's just a misconception which we need to get rid of, at least from my personal perspective. All right. So are there any more questions? I don't think there are any more questions. I think I've answered them. Aishani? Aishani, are you there? All right. All right, guys. Thank you very much for staying online. I hope you had a wonderful session. Our team will be sharing the recording of that on the link which has just been shared. Thank you for patiently watching. Thank you. I think we can end the webinar now.
Thanks, Mridul. Thank you so much, everybody, for joining in. Hope you had a great time.